Good afternoon and welcome to our afternoon session here at the Denver Gold Forum. I'm Taylor Combaluzier, a mining analyst at Red Cloud Securities. We'll start our first presentation this afternoon with Contango ore. From the company, we have Rick van Nieuwenhuyse, who's president and CEO.
Great, Taylor. Thanks very much. Well, good afternoon, ladies and gentlemen. Pleasure to be back in live and in person here at the Denver Gold Group. I will be making forward-looking statements and just draw your attention to some cautionary language around the estimation of resources and non-GAAP measures in my as I throw some numbers around here. I'm going to talk to you about our two projects that we're going to focus on here with Contango. Our flagship Manh Choh project, which is partnered with Kinross and with the Alaska Tetlin Native Corporation tribe. Our recent acquisition of the Lucky Shot project. I'll explain what we're going to be doing there and our plans for making that our second mine to be in production in Alaska. And I'll just give you a really brief introduction to some of our early stage exploration assets in the Tintina Gold Belt. Bit of a corporate overview. We have 6.7 million shares outstanding, so a very, very tight share structure. It's been mostly a friends and family kind of a financing in the past. We are listed OTCQB, which is not the greatest of exchanges to be listed on, so we are in the process now of upgrading to the NYSE American Exchange. We plan to do that in the next quarter here. We're putting our S1 application in, and hopefully by the end of before the end of the year, we're listed up there and improve our trading liquidity. That's the main purpose of getting uplisted to the NYSE. Just a much better platform. We have $29 million in cash, so we're well financed. We had a recent strategic investment by the Alaska Future Fund. The Alaska Future Fund is managed by Barings Group, which is a $350 billion fund, that multi-strategic fund. And that's in partnership with the Alaska Permanent Fund, which is an $80 billion State of Alaska fund. So they put together the Alaska Future Fund to finance projects in Alaska. And I'm proud to say we were the first project they invested in the mining space. So they're a good strategic partner. Obviously, the State of Alaska has a vested interest to, over the long term, see development in Alaska that's not oil dependent, as I think the future for that commodity probably wanes over the next 50 years. So a good strategic shareholder there as well. It's a $200 million fund, so if we need to tap into that at some point in the future, it's good to have shareholders with deep pockets. So let me talk to you about Manh Choh and just introduce you to the project. It's located in south central Alaska towards the Alaska border with Canada. That's right off the Alaska Highway. 1.3 million ounces of measured indicated resource at an average grade of 4 grams per ton. We're all located on private land owned by the Alaska Native tribe, the Tetlin tribe. And this is a bit of an unusual situation in Alaska. Generally, Native corporations own land, mineral rights in particular in Alaska. In this case, this was a pre-existing tribal land package under the old Bureau of Indian Affairs Act, so what was formerly called a reservation. And in the 1970s, when the Alaska Native Claims Settlement Act was being settled, this tribe said, well, we just want our title to our land, our 675,000 acres of land. So the federal government deeded surface and subsurface to the tribe. So it's a pretty unique situation. We have a typical mineral lease with the tribe. They'll receive a royalty. We've been working with them for over 10 years. We've developed a great working relationship over the 10 years that Contango managed the project. And as I mentioned earlier, we're partnered now with Kinross. We brought them into the project basically to truck our higher grade open pit ore to the Fort Knox mill. And what this does is eliminates a huge amount of capital. It eliminates a huge amount of construction risk, financing risk, permitting risk. It makes for a much lower level of execution risk than your typical mining project. I'll also point out there on the last slide that we do have an SK 1300 resource estimate. We were actually one of the first companies, U.S. listed companies, to go through the process of producing an SK 1300 report. So This is a picture of the Manh Choh project. It sits on top of some low-lying hills, about elevation of 1,600 feet. We formed a joint venture with Kinross last year, basically working a three-way deal with Royal Gold to sell their 40% interest and retain a royalty. They sold their 40% interest to Kinross. We sold half of our 60% interest, so 30% to Kinross, giving Kinross 70%. We got cash in the process, so in total, Kinross paid $93 million for this. And I point that out because it's not an earn-in type of arrangement here. Kinross has put good money on the table, and they're moving this project very quickly through the development stages. Our budget this year was $19 million on a 100% basis. We contributed a little less than $6 million of that. The main purpose of the budget was to really get the project ready for permitting and produce a feasibility study, a detailed feasibility study where we can put a quarter-to-quarter mine plan together and have a good plan to deliver the Manh Choh ore to the Fort Knox mill. When we signed the agreement with Kinross, Kinross guidance for capital was $110 million. Last quarter, they recently updated that number to a range of 105 to 130. And I think what you're seeing here is precaution to, we are seeing inflation. I know the federal government or the Federal Reserve refers to it as transitory inflation. We think it's probably real. So I'm going to kind of use that high-end number to make my plans around from a financing standpoint. They didn't update the operating costs. They left them at $750 per all-in sustaining cost per ounce, or per gold equivalent ounce. There's a bit of silver with this project as well. It's mostly gold though. So I'm expecting that if we continue to see inflation pressures like we are, that number may rise as well. Overall average production anticipated to be around 220,000 ounces on a 100% basis. Our 30% share would be 66,000 ounces per year, and with about a 5-year mine life. Obviously, it's a robust project, but in addition to having a robust project, in order to have a successful mining project, you have to keep your workers safe and healthy. Proud to say we have 0 LTIs for both our Manh Choh joint venture project and our own 100% owned projects. The other thing you have to do is work and train locally, and we've got a great track record of this in Alaska. All the projects I've been involved with have really emphasized this, and of course, Kinross is moving forward with that same kind of a plan, and they've done a great job as well. Community outreach also equally important. We had the project for 10 years and managed it and developed great working relationships with the local Tetlin tribe. That community engagement is now expanded to the entire road route. It's about a 250-mile drive up to the Fort Knox mill from the Tok area. So Kinross is now engaging with community discussions on the plan all the way along the road route. So all of the small towns and villages along the road route, as well as the key stakeholders in the region. So here's the project. This is why this works. We're right off of the Alaska Highway. You're looking down towards the Canadian border here. This is the road that goes off to the Tetlin village. It's about 10 miles out to the project site, just behind the bushes there in the low hills off the highway. Again, 250 miles to the Fort Knox mill. The Fort Knox mill has been operating for 25 years. It's just an absolutely marvel of an operation. Won lots of awards for reclamation, lots of awards for reclaiming the stream and improving fish habitat. So Kinross has been just a class act in terms of how they've approached this work in Alaska. So obviously, again, for us and for our shareholders, huge win here in not having to build a mill and a tailings facility and not having to worry about ramping it up and constructing it and financing it. So benefit for our shareholders as well. The $19 million program this year, largely drilling focused early on. We started in February and we're pretty much wrapped up by the end of June, early July. Mostly infill drilling. The idea, we wanted to have a 3-year measured pit. So a lot of that was very detailed infill drilling to get a measured resource that we can then transfer into a proven reserve with the feasibility study. Along with lots of condemnation drilling, metallurgy, hydrology, monitoring wells, as well as geotechnical work. So all that work will go into the permit application, which we plan to do this fall, next quarter, and of course the feasibility study, which we plan to have finished about this time next year. Very simple site plan. 2 small pits. The longer one there measures about 800 meters. The other one's more like a 600, 700 meter circle. You're going to have your development rock, your waste rock right adjacent to the pits. You're on top of the hill, so you don't have a lot of water to worry about, but you do have to have a good water management plan nonetheless. But again, we're not building a mill. We're not building a tailings facility. So a very simple project at site here. So while Kinross does all the heavy lifting for us on the Manh Choh project, the joint venture project, we're going to get busy and work on our other project that we just acquired here called the Lucky Shot. This is a view of the Lucky Shot mine back in 1930. It operated from the turn of the century to about 1942 when the War Act shut down most of all the mines in Alaska. It was a stamp mill. It was a simple gravity recovery. They recovered high 80s to 90% with just simple gravity. And it's because it's quartz and gold. It's a coarse gold vein that runs through a granodiorite host rock. So very, very, very simple geology. There was about 250,000 ounces of production from the Lucky Shot mine from 169,000 tons of ore. So again, high grade, average about 1.5 ounces per ton. Narrow veins, the range is about 1 to 5 meters thick, but typically they're sort of 1 to 2 meters thick. Back in the day, though, they hand sorted the ore and separate the quartz from the host rock granodiorite. Today, we would use an ore sorter to do this, and we could do that very effectively. There is a more recent historic 43-101 resource done by a previous Canadian operator here, 120,000 ounces of 18 grams. So we've got a good start on good high quality quartz vein ore body. What we purchased was 2 groups of patented claims, one focused on the Lucky Shot, War Baby, and Coleman mines, which were all one single vein. And then across the valley, the Gold Bullion, located on or adjacent to that are a big block, about 15,000 acres of state mining claims. So we can pretty much control the district here now. This is a vertical image on an air photo with showing the underground workings. And you can see most of the development work was done off the Lucky Shot adit, with a little bit of work on War Baby and Coleman. And then underneath the Lucky Shot level is the N-Search tunnel, which was built back in the 80s. And it goes all the way back just shy of the underground workings. And so what we plan to do is use that to drill off the ore body. And I'll get to that in just a second. What I like about the project is, one, it's quartz and gold. Second, it's incredibly well located logistically. We're just off of the communities of Palmer and Wasilla. In Willow, there's about 100,000 people that live in a sort of a bedroom community of Anchorage, if you will. Anchorage is about 60 miles away. A year-round road right up to the mine site. So excellent infrastructure, especially when you consider it's in Alaska. We also bought a mill building that goes with this. That was part of the package. There's no mill in the building, and I don't honestly know today whether we'll actually use this or not, but it is certainly an asset. It's located right off the Parks Highway. Again, very simple geology. This is a quartz vein hosted in a granodiorite. There's a lot of interesting prospects in the adjacent schists that are put in fault contact with the granodiorite along a low-angle structure. So we think there's some interesting opportunities there geologically for more of a pogo style, the more disseminated stockwork system. There's lots of prospects in the schist, but none of them were really developed because they weren't high enough grade for the turn of the century mines. I just hired a mine manager, Chris Kennedy. He was former manager at the Pogo mine for 9 years. When Sumitomo owned it, they recently sold it to Northern Star. So he freed up, and we nabbed him. He's going to be our general manager and execute our program safely and efficiently. Lots of data comes with this. 173 drill holes, both in the Lucky Shot and the Coleman area. So we've got a lot of data to work with. We've got a lot of underground historic mine plan data, stope data, that sort of thing. So we've got a lot of data to work through here. Our plan, simple, refurbish the in-search tunnel. It's actually in really good shape. Ramp up towards the Coleman. Before we get there, we'll cut north and cut across underneath the old workings and get up towards the projection of the vein. And then you can see in the cross section, we'll just drill a series of holes along a drift to drill delineate continuation of the high-grade Lucky Shot vein down dip. Second stage will come up to the Lucky Shot level, which is about 200 meters above the in-search level. We'll do the same thing, get out in front of the vein now, and then now we'll be drilling down towards the Lucky Shot vein, so we can get it. Not only do the exploration pretty effectively and efficiently, but that actually will be our development work for getting underground for the mining stage. And then we'd continue that ramp up to the Coleman area, which you can see that 120,000 ounces of 18 grams is outlined there in green. So we've got a good start, and I'm excited about this project. The potential here is basically to produce between 50 and 75,000 ounces of gold with a relatively small mill, excuse me, and which effectively doubles our production level. If you take the 66,000 ounces anticipated from Manh Choh and put that together with the production here, and all with less than 10 million, way less than 10 million shares issued and outstanding. If you do the cash flows on that, that's $10 per share just from Manh Choh, and if we can be successful here, we can see something similar and double that. So I'm very excited about this opportunity. Again, it's kind of low-hanging fruit from my perspective. We've got 3 other projects in the Tintina Gold Belt here, a very prolific belt of rocks. So we like this jurisdiction. It's also the area that has good infrastructure development. So we're going to stick close to our knitting there. Just briefly introduce them there: Eagle, Hona, Triple Z, and Shamrock. So we'll be doing, we did work on them this year, and we'll continue to advance those projects over time. So again, just highlights. We've got a great joint venture and good joint venture partner in Kinross. We'll be in production in 2024, generating probably in the neighborhood of $50 to $60 million of free cash flow with not a lot of shares outstanding. And I could see dividending half of that to the shareholders and exploring, using the balance of it to explore with a very healthy exploration budget. So I look forward to any questions. Thanks very much.
Great. Thanks a lot, Rick. So we'll turn to questions from the audience now, if anybody has any.
Sure. Yes, the question is how many truckloads a day between Manh Choh and Fort Knox? It's roughly 40. So if you stood in one place, you'd see 40 one way and 40 going the other way. They're truck and tandem trailer. That helps minimize the number of trucks on the road. Yeah. Oh, geez. I'll have to look that up for you. Sorry, don't have that off the top of my head. I think they're like 60 tons. Yeah. Any
other questions?
You don't have a lot of shares out there, and you want to go what do you do to create some more flow?
Probably do a financing. Yeah, pretty significant financing. I want to get shares out to the market. We've got great shareholders. This was sort of a friends and family finance company, and we raised $30-40 million that still have less than 10 million shares outstanding.
Any other questions? No? Okay.
Well, thanks very much.
Yeah, thanks a lot, Rick.
Yeah, bye-bye.